Hey everyone, Les here from BG Trading, September 15, 2021. I'll be analyzing BHP, Rio Tinto, Fortescue Metal, and Ventura Minerals. And iron ore price, what's happening with those stocks? They're all falling. Whether this is a good time to buy according to our strategy, or we should just wait still and do nothing. Let's have a look. Just want to remind, this is not a financial advice, just us from BG Trading, sharing with you how we apply BGS20 and BG Trading strategies to know when to buy and when to sell stocks, how we apply the indicators and the KPIs to set up targets, stop losses, avoid FOMO, which is one of the most common mistakes, and much more, all in this channel. So if you like, please subscribe it and share this video with someone. Also, like to invite you to become a member of our Facebook group, Buy, Growth, Sell Strategies for Share Traders. This is a group, it's free. All you need to do is answer a few questions and you have access to a lot of exclusive content by BG Trading, analysis, videos, and much more, all about stock markets. First thing, let's check what's happening with iron ore price as we speak. Now, as you can see here, it's trading from May, from May this year to sort of July. It was trading right at the highs like 220 US dollars, okay, a ton. Now what happened is down to 123. This is look from the top there. We're talking about 45% drop. 45% drop in iron ore price. And that's because I already have done a video here on the channel about Fortescue. So just take a look. I'm going to actually put a link here, and which I explain a little bit why the iron ore price is actually is actually crashing. It's just because one of the reasons, I'm just going to quickly say here, one of the reasons is because China is actually reducing the steel output, and then it's obviously producing less steel requires less iron ore, also cutting funding for construction companies. They are actually purposely slowing down so iron ore crashes. That's what I think, okay, whether it is, but this is what I think. China controls things. Now, I'm going to start with BHP, okay, and then we're going to compare those two things, the actually chart and of iron ore and the BHP itself. Obviously, BHP is a diversified company and produce other materials as well, not just iron ore, but it does have massive exposure to iron ore. And if iron ore falls, those stocks are most likely to fall as well. It was a hype here. BHP was trading around even like $54, and then it fell. We saw iron ore price fall 44.5%. BHP fell so far 25%. So let's write down here. BHP 25% down. Okay. Now let's go to Rio Tinto. And then obviously we have what we call bearish intersection here, which is one of our key indicators that we use to say that we should be out of the stock, especially when we have those massive green candles, okay? So this is a protection. If using BGS20 strategy, you know the bearish intersection is a red flag combined with a green, like a massive red candle on a Heiken Nash is confirmation that you should be out of the stock. Should be out of the stock, especially when the volume is massive. So obviously out of the stock, there was a fake sort of reversal here, but didn't happen. So then normally when you have those massive red candles the way down, little candles it's not strong enough, and then the movement will continues to occur. So potentially we can see if this thing happens right here, we could see BHP trading around $37 sort of thing. I would say even $35, depending on iron ore price. But at the current situation, when the iron ore was actually trading, around hundreds. Let's just see here. later last year, October last year, $124. Let's say here, October 12, BHP was October 12. BHP was actually trading around $37. That confirms my theory. So a potential we can see BHP trading between $35 to $37 if iron ore price stays at where it is at the moment. So I would say buy yet? Not. I wouldn't buy yet myself. So I just stay out of BHP. Now let's take a look. Rio Tinto. Rio Tinto is another. It actually has a more exposure and less diversification than BHP. So now Rio Tinto has fallen about 22%. It's actually outperformed. It's actually outperformed BHP. So 22%. Now let's have a look what happened in October last year. Rio Tinto was trading around $97. Now, once again, if this sort of massive drop happens to occur here, we'll be looking 22% further fall here on the share price. So 22% will bring the price down to $90, $89. We could see Rio Tinto down to $90 a share. So would I buy Rio Tinto now? No way. I would just stay out of iron ore stocks for the moment. So let's have a look. Fortescue. We have a bearish intersection, level 1 there, which is in red. Then, if you look at here, we have a 25% drop. If we have another 25% drop, provided the iron ore price is going to hit potentially $100. So we'll be looking at further drop. We're potentially going to be looking at Fortescue trading around $15 mark. Potentially $15 mark. And now Fortescue is trading 32%. FMG was the one that fell most at this stage. 33% below levels when the iron was on top. So we could see FMG trading around $15 mark. Now let's compare. In October last year, what was trading at when iron ore was at the current level? RIO's I forecast $16, between $15.80 to $16. I think very likely this could be a very interesting hypothetical support around $15 to $16 mark. So I think FMG will go potentially between $15 to $16. So I wouldn't buy now as well. So just stay out. I'm going to stay out of this, but we're going to be looking at potentially to enter on those stocks, guys. So now, Ventura Minerals, Minerals is one of the companies. It used to be Explorer company. We did trade a few times in the past. We normally try to avoid micro stocks like this, but give us some interesting opportunity. Now, this is obviously because it's a micro stock, has fallen the most. Interestingly, it has done its first shipment of iron ore to China. It produces in Tasmania and has done the first shipping in September. So investors are very excited about the results and everything. But the truth is, guys, this company is exposed to iron ore as well, and they'll get the hit from iron ore, I believe. So I wouldn't be buying this stock again as well as the other ones, although this is the one that look most promising for the fact that if it stays above 80 cents, it could be potentially reversing. But I see that if the iron ore keep falling, it's very likely that will reverse despite its producing. So that's why I believe this stock is still wouldn't be buying now, because the macroeconomics is a strong fact for all of those companies, and it gets a little bit choppy when you want to go against not just the trend, but the microeconomic effects as well. So you're going against trading against two very important variables. You don't want to do that. Very dangerous. So I better stay out. There are better stocks out there, better sector like EV related stocks to trade at the moment. So all of the stock, guys, I wouldn't be buying now. I'll just be waiting, watching. And look, by the way, this is October last year. This stock, this company was trading around 3.5 cents. 3.5 cents. Okay. Not to mention now, current levels, the volume of trading is quite low. So we can't even compare Ventura Minerals to BHP, RIO, and then Fortescue. I'm just doing this because our members has asked about Ventura Minerals. They look cheap, so I just look at the chart, and then I still think that's very dangerous to put in place. Even if we're gonna enter, we most likely will buy FMG, Fortescue, because give us a much more confidence about getting the money, having the money invested in the stock that has iron ore exposure. Guys, this was my taking on iron ore, the four miners that we mentioned in the title. So hope you enjoyed. If you have any questions, you have any comments, if you don't agree with what I said in the video, please put at the comments below. Thank you very much. I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.